Good day Forex trader. Your USD Forex signal, bearish breakout to gain steam. The pair's path of least resistance will be to the downside, with the next key level to watch being at 1.1500. Bearish view. Sell the Euro USD pair and set a take profit at 1.1500. Add a stop loss at 1.1650. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1630 and a take profit at 1.1700. Add a stop loss at 1.1550. The Euro USD declined for the second consecutive day as investors reflected on the strong American consumer confidence and the upcoming European Central Bank, ECB, meeting. It is trading at 1.1590, which is lower than this week's high at 1.1665. U.S. consumer confidence and ECB. The Euro USD pair declined after strong data from the U.S. Numbers by Conference Board showed that the country's consumer confidence rose in October. They rose from 109.8 in September to 113.8 in October. This increase was better than the median estimate of 108.3. Confidence rose even as many people remained concerned about the state of inflation. Additional data showed that new home sales rose sharply in September. These sales rose by 14% in September after falling by 1.4% in the previous month. Precisely, new home sales rose from 702K in August to 800K in September. Economists polled by Reuters were expecting the data to show that sales rose to 760K. At the same time, home prices remained high in August. The house price index rose by 18.5%. Therefore, there are hopes that the Federal Reserve will start tapering in the coming meeting. According to the WSJ, the bank will start winding down the $120 billion per month QE program when it meets in November. The next key mover for the Euro USD will be the latest durable goods order numbers from the US that will come out today. These numbers will be followed by the latest European Central Bank, ECB, meeting that will start today. Economists expect that the ECB will leave its interest rates unchanged in this meeting. However, the bank will likely sound a bit hawkish considering that the European economy has made a strong recovery and that inflation is already above the bank's estimate. Euro USD forecast. The 4-hour chart shows that the Euro USD pair formed a strong resistance at 1.1666 recently. It has struggled moving above this level several times this month. At the same time, the pair managed to move below the key support at 1.1616. It even did a break and retest pattern at this level. Also, the pair has moved below the 25-day and 50-day moving averages while the Relative Strength Index, RSI, has been in a bearish trend. Therefore, the pair's path of least resistance will be to the downside, with the next key level to watch being at 1.1500. GBP USD Forex signal, consolidating in choppy trading. The support at $1.3741 is likely to be pivotal. Today's GBP USD signals. Risk 0.75%. Trades must be taken between 8 a.m. and 5 p.m. London time today only. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3790 or $1.3852. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3741. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP/USD analysis. I wrote last Monday that as the price chart was technically dominated by the strong double bottom made below the current price level at $1.3741, we would probably see bullish price movement over the day, but the lower highs made above $1.3800 over the past few days suggested that the price would struggle to advance much beyond that round number. I thought that the best opportunity here would be a long scalp from $1.3741. This was partially a good call as the low of the day was made just a pip or two above $1.3741, although it wasn't really an up day overall, with the price closing almost unchanged. The technical picture now looks very consolidative, with few key support or resistance levels nearby. Again, the level which stands out as important in the price chart below is the support at $1.3741, which looks pivotal. If the price breaks below it and holds there for a couple of hours, this will likely be a bearish sign of a further imminent fall in the price. I do not have much faith in the resistance level I drew at $1.3790, but it might have an impact. Today's direction is anybody's guess. I think the price might easily fall back down to $1.3741 and everything will then depend upon what happens there. AUD/USD Forex signal, extremely bullish above 0.7545. The pair will likely keep rising as bulls target the key resistance level at 0.7600. Bullish view. Buy the AUD/USD pair and set a take profit at 0.7600. Add a stop loss at 0.7450. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7500 and a take profit at 0.7400. Add a stop loss at 0.7600. The AUD/USD pair rose for the third straight day as investors reacted to the latest Australian consumer inflation data. The pair rose to a high of 0.7522, which was significantly higher than this month's low of 0.7170. Australia inflation data. The AUD/USD rose in early trading after data by the Australian Bureau of Statistics, ABS, showed that consumer inflation rose by 3% in the third quarter after rising by 3.8% in the previous quarter. The increase was slightly lower than the median estimate of 3.1%. On a QOQ basis, consumer prices rose by 0.8%. Meanwhile, the trimmed mean CPI rose from 1.6% to 2.1%, while the weighted mean rose from 1.7% to 2.1%. These numbers were better than the median estimates of 1.8% and 1.9%, respectively. They also show that the country's inflation is above the Reserve Bank of Australia, RBA, target of 2%. Analysts expect that Australia's inflation will remain above the target 2% because of the rising energy prices. In the past few weeks, the prices of crude oil has jumped to the highest level in 8 years while natural gas has risen to an all-time high. These costs will likely be passed to consumers. The AUD/USD pair also reacted to the strong Chinese industrial profits data. The numbers revealed that these profits rose from 10.1% in August to 16.3% in September. Chinese data is important for the Australian dollar because of the volume of trade between the two countries. The pair also rose after the strong American consumer confidence data that was released on Tuesday. The data showed that confidence rose for the first time in 3 months in October. Later today, the pair will react to the latest U.S. durable goods order numbers. AUD/USD forecast. The 4-hour chart shows that the AUD/USD pair has been in a bullish trend in the past few days. The pair is trading at 0.7522, which is slightly below this month's high of 0.7545. It has also moved slightly above the short and long-term moving averages. The pair has also moved above the key resistance level at 0.7478, which was the highest level in September. Therefore, the pair will likely keep rising as bulls target the key resistance level at 0.7600.